Tactical Trading with Alpha 2. Before viewing this video, make sure you have reviewed the 3 prerequisite videos highlighted inside of the magenta box. Decimal generates 2 types of contextual signals called Alpha 1 and Alpha 2. Alpha 1 has a more strategic orientation and is covered in the first 3 training videos. Alpha 2 is more tactical and is the subject of this training segment titled Tactical Trading with Alpha 2. All of these free videos can be found in the resource section of our website under Decimal Training. By the way, please note you will find written transcripts for further study posted on our website below each video. When you read conventional technical market advice on a Twitter feed or in the internet at large, it can appear as if analyzing and hence trading markets are pretty straightforward. Nothing is further from the truth. Asset markets belong in a special category called complex adaptive systems, which are in fact very difficult to model without a multiple model approach. As proof, I offer the simple fact that conventional technical analysis has never been more widespread and accessible, yet among the vast numbers of aspiring traders, only a small percentage ever succeed over any sustained period of time. As for hedge funds, who are supposed to be the smartest guys in the room, well capitalized, with access to the finest research, their failure rate is much higher than one might think. In fact, their average lifespan is about 5 years. So Charlie Munger's advice about mastering and deploying multiple models is really important because of what he calls the Lollapalooza effect, which is the synergistic effect from deploying multiple models. It's at the core of the Berkshire Hathaway investment strategy, and it needs to be at the core of any serious trading method in business. At Stock-Zen, our entire premise for research and development is rooted in this guiding principle, and everything we do, our software, our protocols, all reflect different ways to synthesize multiple models effectively and then put this principle into pragmatic practice. Alpha 2 is a great example of the synergy possible when 2 unconventional models work interactively. By the way, we use the term submodels to describe models that are components of a larger network or combination of models. For a more complete explanation of the multiple submodels that we deploy, please visit our website and read Decimal Submodels Explained, which is in the publications section of our website found in the resources section. Both signals work exceedingly well in all markets and in all types of market conditions. However, please note that these signals are designed as contextual weekly signals. This means that when an alpha 1 or 2 signal is activated, a potential trade opportunity is at hand. But potential and actual are 2 different things. Decimal is systematic, but it's not a mechanical robotic trading system. One still needs to do the work of verifying a signal by monitoring daily price action to define if a potential signal resolves into an active or validated signal. Only then does the risk-reward protocol come into play, which then determines if an executable signal occurs. We explain what that process looks like in this video using intra-week range analysis as a validation technique. However, you might just as effectively use your own proprietary validation techniques as well. Let's now proceed by visualizing a schematic of the multi-model framework for Alpha 2 decision making at a tactical level. We will then use it to define a rule set for Alpha 2 to identify what a compelling tactical trade opportunity looks like. The Alpha 2 algorithm is a powerful pairing of 2 submodels, yin-yang dynamic and clock rotation. Yin-yang dynamic is very unconventional as it interprets data and price behavior using a Taoist or Taoist worldview phenomenon as opposed to a Western point of view. All cultures, Western included, impose certain paradigms on model building and thinking, and an Eastern or Taoist and Zen point of view provides us with thought diversification. Yin-yang dynamics has many useful facets, but for Alpha 2 purposes it scans specifically for tree, which are green rising bars, or fire, which are red declining price bars. Remember, trees are green and fires are red. This classification of price bars is part of what we define in-house as our Wuxing constellation of manifest price action. We then pair the yin-yang model with our clock rotation model. Clock rotation is also unconventional and primarily provides a metric for angular momentum, relative velocity, or one type of rate of change of reversals up or down. Since we're using these two models in a tactical mode, their potential is best maximized when this model pairing is enfolded within or filtered by a higher time frame or strategic point of view. In essence, Alpha 2 itself as a tactical unit can be inserted into a higher time frame strategic to great effect, which increases the Lollapalooza effect. And of course, the core of any trading business is the discipline and framework for actual order placement provided by tactical risk-reward analysis. Let's now take a look at an Alpha 2 condition. Alpha 2 is signaled when a weekly fire or tree bar occurs in a 2 or 3 o'clock position, vector 2 or vector 3, coincident with matching sellers or buyers in control above or below at 3 or 4 o'clock, vector 3 or 4. The fire or tree, which are red or green bars, derived from the yin-yang dynamic submodel, while the sell side or buy side control vectors derive from the clock rotation submodel. Note, the exploitable edge is this. If an Alpha 2 becomes an active or validated signal, then the expectation is very high that price extends to take out the high or the fire or tree bar. This chart is a weekly SMH chart of the semiconductor ETF. An upward thrust up bar at X causes the decimal clock to reset for a new clock rotation count 1 through 4, which is plotted as a 1 o'clock vector at V1. Carefully note that any newly plotted 1 o'clock vectors means the buyer's sell side clock has been reset by the previous bar, and these 1 o'clock resets are identified in this chart by a black dot within the red or green clock dots. Also notice at week A the red fire bar that develops as the close of that week. And note this occurs in a 2 o'clock position because the sell side control vector is plotted above it at V2. This suggests a fast rejection. So a fire bar is now in play with a sell side control vector overhead for the next week at V3 or 3 o'clock and V4 or 4 o'clock. So Alpha 2 suggests a potential for a short may be developing. This is the time to step back and assess the bigger picture for higher time frame context. Enlarging the picture, we can see the SMH weekly has been in a broad move higher from a swing bottom, a major swing bottom near A, October of 2014. We also see structural swings with major rising swing bottoms at B and D, with higher tops at C and X. The macro moving averages, the 200-day and 45-week, are also rising, so macro trends are up, so we conclude any short is clearly counter trend. However, we notice the 10-week or 50-day moving average at E has flattened, and notice the swing top at C failed to gain much price acceptance above the December 25-14 high to its left, and then had a bid collapse, which is a near 100% retracement to D in March of 2015. Bid collapses like this are subtle deviations from a pattern of higher tops and higher bottoms and can indicate a transition into trading range price action. We also notice the last swing top at X is an upthrust, with no price acceptance at the swing top at C. So it's possible higher time frame bids are weakening and we are in a topping or trading range price action. One of the natural features of a trading range is sudden reversals with fast moves up or down across the range. Therefore, we could see a retest of the 200-day at F, or maybe a deep correction back down to the bottom of the possible trading range at D. Reversion to the mean is itself a powerful model, so it is not unreasonable to consider a possible reversion to the 200-day in light of evidence of a recent bid collapse and upthrust failure price action. So, while a short would still be counter the macro trend, the 10-week is flat, there's a bid collapse on the left, and we're upthrusting what could be a trading range, so a high probability tactical short may offer some short-term profits or a hedge against longs with possible swing potential down to F. Note that the default rule set for Alpha 1 demanded a bias to trade ideas with the macro trend, whereas with Alpha 2 one can trade with or counter to the macro trend. However, Alpha 2 signals that are counter trend are generally best when used as short-term swing trades, not longer-term position trades. So the conclusion here is if we see the alpha 2 condition validated at sell side vector 3 or 4 intra-week in the daily time frame, we will have a validated short signal in hand, and as our risk reward protocol comes into play, we may be offered an executable trade with an aim to take a partial profit and hold a part of the original short to see if we get reversion to the 200-day. So we begin to stock a short in the daily time frame to validate the signal. Now we monitor the daily price action versus the weekly clock vector 3, marked on the daily chart. This daily chart is the red line at F. Vector 3 includes the 5 trading days, Monday through Friday, or A through E, which represent the intra-week daily price action for the weekly clock vector we're trying to short against. Notice the Monday-Tuesday price action, A to B, develops from a low, then breaks to the upside with no test of V3 occurring until late in the week, so the intra-week price action is not bearish. So there's no validation of V3 as a sell-side control level. However, the test of V3 was clearly occurring at week's end, so that test may develop into a rejection the next week as V4 comes into play. We are now monitoring the daily price action for the week with clock vector 4, or V4, to see if the test of V3, which began the previous week, develops to the downside validated by intra-week price action below V3 and now V4. The Monday bar at A is uneventful, but the rally appears to be stalling as the close is barely positive versus the Monday open. The Tuesday bar is clearly an emphatic outside down bar rejection, and we quickly draw our risk-reward grid from the high of Tuesday down to our minimum target, which is to tag a possible partial profit target on a test of new lows. Why is the test of new lows a target? Remember, we said earlier in this video that the exploitable edge for alpha 2 is this. If an alpha 2 becomes an active or validated signal, then the expectation is very high that price extends to take out the high of the fire or tree bar. In this case, our initial target is the low of the weekly fire bar that generated the signal. I draw this grid from the high at B down to just above that new low target because since the macro trends are still up and this is counter trend, I want to make sure I get a fill and lock in a profit. With my grid in place, I see at X that the low of the Monday-Tuesday range is breached and price is still trading in the alpha zone entry zone between the yellow and magenta lines at E and F. I can see at a glance that I have a 1 to 2 risk reward to the partial profit target. This also implies a much greater reward potential should price extend down to that higher time frame mean value at the 200-day target. So I short SMH at market and place orders accordingly to take partial profit at G and stop out the short if wrong above B. One can also buy puts if they're option savvy because alpha 2 signals tend to work quickly, meaning within a few weeks. The next day, I'm filled on partial to cover short. However, the macro trend is up, so this may be all that's offered. I may at this point lower my stop to ensure profit or keep the stop in place with the size reduced and let things play out because the 200-day level is still below at 55-ish and the low at the last swing bottom from March 2015 was below 53. Here on the weekly chart, we see a test does develop at X near the 200-day. At this juncture, one might trail a stop based on weekly or daily stop levels or book the trade depending on one's strategic point of view. So this is how alpha 2s develop and a default protocol for trading them. We can summarize these steps into an alpha 2 default rule set. The alpha 2 default rule set. Number 1, scan the watch list for weekly fire or tree bars at 2 or 3 o'clock coincident with matching sellers or buyers at 3 or 4 o'clock. Number 2, assess intermediate and macro trends, the 10 and 40 week moving average, for potential with or contra trend trade location versus the moving average lines. Number 3, monitor for a test of weekly sellers or buyers at 3 or 4 o'clock. Number 4, draw potential risk reward grids as soon as possible to anticipate order placement levels and to size the trade. Number 5, monitor for intra-week bias to verify alpha 2 and validate the risk reward grid. Number 6 is if the risk reward grid is valid, then place an entry and stop order. Number 7, If the entry order is filled, then you place your take profit order. And number 8, manage the trade or the core unit mindful of the higher time frame trends. One word about risk reward. With Decimal, we're willing to enter at 1-to-1 and 1-to-2 risk reward in the alpha entry zone if we've done our homework for 3 reasons. 1, our win ratio with alpha 2 is very high if the protocols and rule sets in these videos are followed. Number 2, due to a higher time frame view, there will be many occasions when we will trail a stop on the remaining position and capture larger profits. And 3, booking profits on part of the position frees up capital and locks in a quick profit or break even on the trade, which in turn allows one to be more detached about the rest of the position, enhancing trade management. This concludes this video introduction to tactical trading with Alpha 2. The last video in our 5-video decimal training series is titled Intraday Trading with Alpha 2. Even though it focuses on intraday price action, it illustrates the same principles of decimal software that are applicable to swing trading. For further study of decimal-based trades, please visit the Trade Archive found in the resource section of our website and review all Alpha 2 tactical trades in the archive. Thank you for your interest in decimal trading tools. We have dedicated nearly 4 decades developing and refining our models and software and the protocols for effective trading. Our mission is to empower you to build a profit-driven trading business that thrives in all types of market conditions. We hope you allow us to become a valued long-term trading partner in building that business. Good wishes and good trading.